This example illustrates taxation of savings and credit cooperative societies. It reads as follows. Makazi Savings and Credit Cooperative Society Limited reported the following income and expenditure for the year ended 31st December 2019. We have incomes which include interest on loans to members, interest on savings account, net, interest on fixed deposit account, net, other investment income, and then rental income. Expenditure include admin expenses, repairs to rental property, extension to rental property, and caretakers' wages. To answer this question, we'll start by reminding ourselves about the taxable incomes of Savings and Credit Cooperative Society. Savings and Credit Cooperative Society have the following incomes. Interest income from members or interest income from loans issued to members. Now, this is exempt from taxation. Then you have interest income from other sources. From non-members. This is taxable, but only 50% is taxable. That is interest income from non-members. Then you have other investment incomes. Other investment incomes include non-qualifying dividend income that this particular SACCOs may be having, including non-qualifying dividend income. Non-qualifying dividend incomes, for example, and these are 100% taxable. Then we have rental incomes. And rental incomes, after deducting the rental expenses, so the net amount of this should be taxable. After deducting the rental expenses, the remaining amount is taxable 100%. If there is any other income that the SACCO may have, which is taxable, then that is also taxable. Any other taxable income, according to Income Tax Act in Section 16, is taxable at 100% is taxable. These are the taxable incomes of the SACCO. But the first one is not taxable, that is a loan, interest on loan to members. The question here is that this particular cooperative society has a number of incomes. So we need to analyze the incomes in terms of whether the incomes are taxable or not taxable. Begin with interest on loans to members. And interest on loan to members is exempted from taxation, not taxable. Interest on savings account, this is non-qualifying interest income. The reason it is non-qualifying interest income is because it is an interest income which has been received by a body corporate. This interest income is considered to be non-qualifying interest income if it is not exempt. Therefore, we need to determine the gross amount, which then we add to the other incomes. Being net is to mean that the withholding tax has been collected at source. The withholding tax on non-qualifying interest income is the rate of 15%. That is the withholding tax. The net amount which has been received of 170,000 is after deducting the withholding tax. Net means withholding tax has been deducted. Withholding tax on non-qualifying interest income is at the rate of 15%. That is to mean 170,000, therefore, is equal to 85%. If 170,000 is 85%, then we need to determine the gross amount, which is 100%, by saying that 100% now is equal to 170,000 times 100 divided by 85. And that is going to give you a total of 200,000 as the gross amount. We do the same to interest on fixed deposit account, which also is non-qualifying interest income, and therefore the withholding tax collected at source is a 15%, remaining 85%. Therefore, 100% of this particular interest income equals to 850,000 times 100 divided by 85. That is going to give you 1 million. Now that is about the first two items. Other investment income, assuming they are taxable, then they're taxed 100%. Rental income is also taxed 100%, but rental income is accompanied by some rental expenses. Rental income is accompanied by some rental expenditure. Administrative expenses are not allowable. Repairs to rental property is related to rental income. Extension to rental property is capital expenditure, therefore not allowable. And then caretaker's wages is an expense allowable, but is a rental expense, so will be deducted from the rental income. We are required, therefore, to determine the taxable profit of this particular SACCO for the year, and we can extend to determine the tax payable by the SACCO. To answer this question, we prepare the statement of taxable income. Makazi SACCO Limited, statement of taxable profit. As at statement of taxable profit for the year ended for the year of income 2019. So this is the structure of the statement of taxable profit or statement of taxable income. Begin with incomes as follows. Interest on savings account. Remember, we said that interest on loans to members is exempt, so we don't add it. We start with interest on savings account. Interest on savings account is a total of 200,000. But only 50% is taxable because this is an example of interest income from non-members. Therefore, we are going to have 200,000 by 50%. And therefore, we only pick 100,000 as taxable income. Interest on fixed deposit account. Interest on fixed deposit account is also taxable, but only 50% is taxable. Therefore, we have 1 million multiplied by 50%. Because this is an example of interest income from non-members, therefore 500,000. The next item, which is taxable 100%, is other investment income. Which is 120,000. The next item is known as rental income. Rental income need adjustments, and therefore we adjust it as follows: 600,000 on the first column, then less rental expenses. And the rental expenses include the following. The first one is repairs to rental property. Repairs to rental property. The item you can see here, repairs to rental property, is equal to 240,000. Secondly, caretakers' wages. An item you can see here as 120,000. Deduct the two from 600,000 so that you remain with 240,000. Now we need to add all these incomes, all the taxable incomes, as you can see. And the total of the taxable incomes is equal to 960,000. After determining 960, we call it adjusted taxable profit. Adjusted taxable profit. So that is how to determine the taxable profit for a SACCO. After that, we may go ahead and determine the tax payable by the SACCO as follows. So this is the tax liability section. Beginning with the gross tax liability to be 960,000 multiplied by 30%. Being a corporate body, the rate of tax is the corporation tax rate, which is 30%. And that will give you a total of 288,000. 288,000. But that is the gross tax liability. This SACCO had some withholding tax collected on interest on savings account and interest on fixed deposit account, which is going to be withholding tax. So less withholding tax. Less withholding tax, starting with interest on savings account, withholding tax on savings account. On interest on savings account, the withholding tax is 15% of 200,000. That is equal to 30,000. And withholding tax on fixed deposit account, which is equal to 15% of 1 million. And that is equal to 150,000. We therefore need to deduct the withholding taxes from the gross tax liability. And if we do that, then we're going to remain with a total of 108,000. And 108,000 is now called the tax payable or net tax liability. Net tax liability, which is now the tax payable by the SACCO. That is how to prepare the statement of taxable profit for such a question, in case you have to answer such a question, that is how to prepare the statement of taxable profit and also determine the tax payable.